This is Terrence Banks with Information Age Financial Solutions, coming to you about the 401k plans and should that be an option for us going forward. I came across this fantastic article from Economica. It's not even one website that I'm actually really familiar with, but again, I'm always on the lookout for interesting articles and different things explaining the information age times that we live at and questioning these sacred cows that we've been taught to believe. And 401ks has just been spelled out. You constantly see commercials out there, and they're been praised as the best way for what you do, especially if you're working at a company. As this article points out, those days are days of the past, and we should look at different ways of providing income for the future. And required minimum distribution spell disaster and even greater intervention as sellers overwhelm buyers. Corrected? And this is a great excerpt from Mark Twain right here. It ain't what you don't know that gets you in trouble. It's what you know for sure that just ain't so. And that's what I'm looking at for the best way to describe what we've been taught to do in terms of 401ks. Simply put, investing for the long term had its time, but that time is drawing to a close. I'm already saying it's done. That's not even really going to be applicable for my kids. And it is because we have such a large population retiring. And then what he's going on here, the required minimum distributions that the ERISA Act did at age 70.5 years old, retires are mandated by force of law to sell tax-deferred assets accumulated over the lifetime and to do so in a 27.5-year period. Conversely, buyers incented by tax deferral but not forced to buy by law generally have a 35-year window of accumulation. Over the past 65 years, on a population base, there were 3 new buyers for every new seller. Over the next 25 years, on a population base, there will be 3 new sellers for every new buyer. Right there alone. If you're planning for the long term with a 401k, these statistics right here by population, it doesn't make any sense. You're going to lose money if you're not actually getting financially educated and technical analysis. Something I probably will go on in another video. But for this argument's sake, let's just read this part again. It's worth reading again. Conversely, buyers incented by tax deferral, but not forced to by law, on a population basis, generally have a 35-year window of accumulation. Over the past 65 years, there were 3 new buyers for every new seller. Over the next 25 years, there will be 3 new sellers for every new buyer. So what does that actually mean? By law, this is going to push and mandate a correction. The population of 70 plus years old in America is skyrocketing. There are more than a few ramifications due to this. But in this article, I want to focus on what happens to the population at age 70.5. Particularly when Americans reach 70.5 years old, he or she is compelled to begin selling assets held in a tax-deferred retirement account. 401ks, profit sharing, SEPs, simple IRAs. These are all called required minimum distributions. The minimum percentage to be sold out is about 1/27th of an asset annually, although the current life expectancy for a 70.5-year-old present is about 85 years old. So by law, they have to mandatorily start taking the money out at 70.5. So again, with that, when simple numbers and simple things we've been talking, when there's more people selling that require to buy, you're going to have a correction. It's going to automatically go on down. But it's for the next 25 years. So people have always been conditioned to believe, well, if we have a market correction that they tell you, we're going to be able to, bounce back up, and it's for the long term, it's going to be, a good thing. But if you're having this amount of population selling by law, not to mention if we have a correction where they're going to need money, which is going to even push the things even higher for the mandatory aspect for people to sell, and we could have a stampede of people just trying to get money out of that. So will the Federal Reserve back it up by buying the assets? It's a possibility. But do you really, if you're 45 years and, matter of fact, if you're 50 years and under, do you really have 25 years to see if it comes back and it's going to be 3 buys in? You really need to know something different. You really have a better strategy. This article is worth reading, and I'm going to just highlight here Economica, and it's dated March 23rd. Required minimum distribution spell disaster, even greater intervention as sellers overwhelm buyers. And that's what's something to be much more mindful as we going on. So look at the chart here. Look at this chart. The chart below shows a population of 2 groups from 1950 to 2015. 25 to 60-year-olds are 78 million. 70 plus year olds are 24 million. Over this 65-year period, there were over 3 new buyers for every seller. Again, he's pointing this out. The chart below shows the population from 2015 to 2040. 25 to 60-year-olds, 11 million. 70 plus year olds, 31 million. Over this 25-year period, there will be 3 new sellers for every new buyer. These charts are just showing to you right in simple numbers, simple charts here. This is saying over the next 25 years on a population base, there will be 3 new sellers per every new buyer. And sellers are mandated to sell faster than is hoped that buyers can accumulate. Oh, right, let me go to that again. This is a saying over the next 25 years on a population base, there will be 3 new sellers per every new buyer, and sellers are mandated to sell faster than is hoped that buyers accumulate. This is assuming there is adequate job growth and wage growth producing the excess income for retirement savings, something that has not been happening since 2000, if one looks at either metric. So 401ks is no different than a savings plan. And if you're having on a population basis 3 new sellers for every new buyer, that's going to lead to at minimum a correction. We haven't had this job growth. We haven't had this wage growth. And job growth and wage growth is going to be in question, especially with the age of technology that we're coming into now. So there's going to be a correction. But again, my point about this was just to point out, should we retire the idea of the 401k? It doesn't make any sense going forward because just the number base and population growth that we have. This is Terrence A. Banks with Information Age Financial Solutions. Until my next video, be mindful of stuff. Start getting financially educated. If you're going to do stocks, look in technical analysis and get educated about it. Until my next video, I'm out.